Many businesses and individuals use Excel to create budgets and income statements as well as other financial statements. These financial spreadsheets include income amounts, expense amounts, and net amounts. It's a good way to track what money comes in, what money is spent, and how much is left at the end of the month. In fact, the net amount is actually the total income minus all of the expenses, all of the bills, and what's left over is called the net. Now, most businesses create a yearly budget, and many individuals or families also create a yearly or monthly budget. Some budgets will list the planned and the actual expense and income amounts. When actual amounts are entered for expense and income amounts, it's easy to calculate the difference between what you budgeted for and what really happened. So let's take a quick look at this spreadsheet. This is a monthly budget for December 2010. You can see the total income was budgeted at $1,030, and that was the sum of wages and eBay sales. That's what they thought they were going to get. They planned on that. Actual amounts were less. The actual income was $885. This is the sum of the two income amounts. So the difference is $145 less than what they budgeted. So they planned that they would actually have $1,030, and when the money actually came in, they only had $885. We do the same thing with expenses. We itemize all the budgeted amounts for expenses and then enter the actual amounts, and then you can see the difference. So in this case, they were right on their budget for the first three items: rent, cell phone, and internet. But the groceries, they spent $25 more, and for miscellaneous, $20 less. So their total expenses turned out to be $5 more than what they budgeted. They spent $5 more. So the net, remember the net is the total income minus the total expenses. They budgeted that they would have $240.50 left. Their actuals came in at $90.50, and that's because they had a difference of $150. $145 less income and $5 more expenses. So that's a budget where you actually see actual numbers. Now let's take a look at a simple income statement. This income statement is for 6 months, January to June, and these will be actual amounts. So these are actual amounts of income. Again, how much money came in each month for wages and how much came in money for eBay sales. You might have other income items: interest income, loan income, some other type of income, child care, child support income. They're all various income categories. And then all of the expenses, again, each category, and these are actual numbers. The total expenses are listed here in row 15. So the difference, how much money was left after all the money came in and all the bills were paid, or the expenses, is the net. So they had a positive net amount every month except February. So each month they had cash left over, except the month of February they were actually short $9.50. So that's just a quick look at income statements and budgets that show actual amounts versus budgeted amounts.